Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the insurance sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The insurance sector of Indian share market comprises of companies which deals in life insurance, general insurance, health insurance, and reinsurance services. It plays a critical role in financial inclusion and risk management for individuals and businesses. India is one of the fastest growing insurance markets globally, yet it has low penetration compared to developed economies. The key growth drivers for this sector includes low insurance penetration, growing middle class, digitization and fintech integration, regulatory push, rising health awareness, and favorable demographics. The government supports this sector with policies like FDI limit, which has increased to 74%, Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Suraksha Bima Yojana, Ayushman Bharat, IRDAI reforms, and tax benefits. The major challenges for the sector includes low awareness and mis-selling, high claims ratio in health insurance, public sector dominance, regulatory compliance, and underwriting risk and fraud. So that's the summary of the sector. Let's now try to identify historical trends based on the data in the sector using two graphs, yearly returns and the monthly returns graph. I have analyzed the share price movement of last 8 years of top 10 companies of this sector and created these graphs based on that data. The data is available only for last 10 years and hence not included data for 10 years for the sector. The top 10 companies of this sector comprises of 9 large cap and 1 small cap company. So let's start with the first graph, which is the yearly returns graph. So this is the yearly returns graph, and as you can see, there is no data available for 2015 and 2016. The green bars over here shows the positive yearly returns. The red bar shows the negative yearly returns. The orange line down here at the bottom shows the cumulative returns. The green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. So let's start with 2017. 2017 was a decent year for the sector as the sector managed to give returns of 27.58% in that year with 8 positive months and 4 negative months. In 2018, the sector managed to give negative returns of minus 14.87% with 8 negative months and 4 positive months. The sector reverses the direction again in 2019 and managed to give good returns of 31.46% with 6 positive months and 6 negative months. And the sector changes the direction again in 2020 and managed to give negative returns of almost minus 3% with 7 positive months and 5 negative months. It changes direction again in 2021 and managed to give returns of only 8.91% with 7 positive months and 5 negative months. Again, change direction next year in 2022 with minus 8.28% returns, 7 positive and 5 negative months. Change direction again in 2023, gave good returns of 30.51% with 7 positive and 5 negative months. And in 2024, gave very average returns of 13.57% with 6 positive and 6 negative months. So, extremely bad graph, one of the worst that I have seen for any sector till now. The cumulative return, if you follow this orange line, 105.10 in 10 years. So that means twice in 10 years. I mean, it's been a long time since I have seen such a bad graph for any sector. Let's see the key takeaways. I am sure there is nothing to be taken away from this apart from the fact that this sector is a huge letdown for its investor. Let's see. Cumulative return 2x in last 10 years. Sorry. Last 8 years, not 10 years. The cumulative return is from last 10 years. Sorry, last 8 years, not 10. CAGR of 7.45, so it is equals to an FD. Net negative yearly return Three times in last 8 years, this sector has given negative yearly returns. Best year was 2019 with 31.46% returns, and the worst year was 2018 with minus 14.87% returns. Positive to negative year ratio 1.67 is to 1, that is 1.67 positive years against each negative year. Extremely bad, extremely bad, extremely bad ratio. The worst, I think, for every any sector that I have seen. Pathetic graph, pathetic impression. Let's see the next graph, which is the monthly returns graph. Okay, the green bars over here shows positive mean monthly returns. The red bar shows negative mean monthly returns. The green line shows number of years with positive returns, and the red line shows number of years with negative returns. Let's start with January. January, the average return is 1.95 uh, percent, which is an average return, I would say, and with four positive and four negative years. Remember that we only have data for 8 years, not 10 years. February and March clearly are the bad months for this sector, if that is even possible to say bad months with such a low returns. But anyways, February with minus 1.59% returns, four positive and four negative years, and February with minus 1.22% negative returns with again four positive and four negative years. April seems to be the best month for this sector with 5.47% returns, 8 out of 8 positive years. So this sector has given positive returns in April all the time in the last 8 years. So extremely good month for this sector. May, an average month with 1.01% returns, 5 positive and 3 negative. June, 2.62% average returns. So decent returns, I would say, considering the scenario and considering the uh, returns that other months have given. 5 positive and 3 negative years. July, a very good month with 4.19% returns, 5 positive years and 3 negative years. August, another negative monthly return, average monthly returns month with minus 0.87% returns, 5 positive and 3 negative years. September, by far the worst month for this sector with minus 3.01% average monthly return, 5 negative years and 3 positive years only. October, below average month with 0.89% return, 5 negative years and 3 positive years. November, a decent month with 2.80% average returns, 5 negative year and 3 positive year. And December, another month with average of negative returns, which is minus 0.12%, again 5 negative years and 3 positive years. So I would say extremely, extremely bad graph. One, two, three, four, 5 months with negative average, and 1 and 2 months with almost negligible returns, that is flat months. So 5 out of 7. There are only 2 months. There are only 5 months which give some kind of returns to its investors, and those two are very meager returns, I would say. So monthly graph as well, nothing much to celebrate apart from one fact that April has given positive returns 100%. 100% of the times, 8 out of 8 years, April has given positive returns for this sector. Let's see the key takeaways. Cheaper months: February, March, August, September. February, March, August, September, in fact December as well. Costlier months: April and July. So April and July. April is the best with 5.47 and July with 4.19% returns. Positive to negative month ratio is 1.18 is to 1, which means 1.18 positive months against each one negative month in the last 10 years, that is in the last 120 months. One of the worst for any sector that we have seen in this entire long journey. I think There was only one more sector which has this ratio, this less. So it's another bad number for this sector. I would say it is very hard to find out anything good about this sector as of now, based on the last 8 years performance. Anyway, that is all from my side in this video. Thanks for watching it, and if you have liked it, click the like button and subscribe to the channel. Share it with your family and friends, and I'll be back soon with another video. Goodbye for now.